Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm happy to join you on this Thursday, June 29th. I've got five interesting charts I'm going to go over with you today, but first, I do want to mention that we have our bullseye forecast, which is our mid-year update, and that will be held next Thursday, July 6th at 7 p.m. If you go over to our website, earningsbeats.com, that's plural, both are plural, earningsbeats.com. You should see the registration link. You can click on that and simply just go over and fill out the information. You can hit this sign up button. Seats will be limited, so you do want to register as soon as possible. This is a free event, no credit card required, we will add you to our Earnings Beats Digest newsletter, which is a free subscription. Again, no credit card required. You can unsubscribe at any time. But anyone who comes to our free events, we always reach out to our Earnings Beats Digest community, our free newsletter community, in addition to our paid members for these events. So I just want to make sure that you are aware we are having this event. There haven't been too many folks out there who have made the calls that I've made over the past few years through the pandemic, at the start of 2022, before the cyclical bear market, calling bottoms and being convicted about those bottoms, the double bottom, one in June, one in September, and the ultimate low printed in October of 2022. And since then, I've been extremely bullish. Market continues moving higher. Got some interesting things I want to go over at this webinar 1 week from today. So please make sure that you go over to earningsbeats.com, click on the link to register, and then simply hit this sign up button, and we will have you set up. So today what I wanted to do is I wanted to go through five charts with you. One of them is taking a look at the industrials. Now, this is a long-term monthly chart. This is going back 15 years on the industrials. And I just want you to look, number one, at the fact that we have continued to go higher throughout these last 15 years. I know folks have talked about, bear market of 2022. It was cyclical in nature. We're out of it. I think that ended, in my opinion, it ended in October at that low. And by the way, of the last 14 bear markets, 7 of them have ended during the month of October. So this was a bear market that kind of fit in to the profile of a lot of the previous bear markets. And so from that October low in the overall market, we've gone higher. And look at what industrials are doing. So industrials came out of that October low, did extremely well in October and November. And that, if you go back and you look at history, October and November tend to be extremely strong months for industrials. I mean, if you go back and you look, here's October, November 2022. Then let's look at October, November 2023. Net positive. October, November 2021. Then you go back to October, November of 2020. Huge move to the upside. How about October, November of 2019? Moving up. The one time that we've struggled with the XLI was in 2018, and that was in the fourth quarter when we had that other cyclical bear market. So that year didn't work, but look at 2017. There's October, November, higher. 2016, October, November, higher. 2015, October, November, higher. 2014, October, November, higher. Anyhow, that was just typical of what we normally see back in 2022. We came out of that bottom. Industrials led for those 2 months. We went 5 or 6 months just sideways consolidating here, just beneath the all-time highs that were set back in 2021 until this month. June, we've had a big move, and we have now moved to all-time highs on the XLI. I think that is a very, very good sign for the market as we go forward, because industrials are led in large part by transportation stocks. I want to show you my next chart. This is the S&P 500 on the top. This says 12-year chart. Actually, it goes back about 15 years. But this is the S&P 500 at the top. This is transports, the next panel. And then the bottom panel, this is a correlation showing you how well the S&P 500 and the transports are correlated. And you can see that we've spent most of the time for the last 15 years above positive 0.5. So these two have been extremely positively correlated. When we do go into negative or inverse correlation, doesn't last long. And we've only seen about 5 periods in the last 15 years where we've seen the S&P and transports really move in opposite directions for any extended period of time. It's just not, it doesn't happen that often. Now, I mention all this because look at the S&P 500. These are periods when transports are moving higher. So you'll see these blue directional lines. Here's the transport group moving up, huge rally in the S&P 500. Transports moving up, huge rally in the S&P 500. Transports moving up. This is 2016 through 2018. Big advance in the S&P 500. How about 2020 after the pandemic? Had this huge move to the upside. And S&P 500 pushed higher as well. But we have periods where transports don't do so well. And if you look at 2011, 2012, couldn't get out of their own way. And the S&P 500 throughout this period, yeah, we had some down, then we had some up, a little bit down. But net for the period, we didn't really do much. Transports were not providing the S&P with that lift. Look at 2015 throughout maybe through maybe the middle part of 2016. Transports were struggling. S&P 500 struggled. Look at the 2018 to 2019 through 2019 and into 2020. Could not break out in the transports. Down on the S&P, up, and then back down. Basically finishing the period right about where we started it, with transports doing nothing. The cyclical bear market of 2022, transports trending lower, taking the S&P 500 down with it. But look at what's just happened. If we go back and we look at these periods where we've had these downtrends, when we've broken those downtrends, or here in this case, this is where we started. I could have waited probably and connected here, because this is where that trend line was broken, which was in the third quarter of 2020. Huge move up in the transports. We wouldn't have had 105%, but we probably still would have had about, 40, 50% at least from this breakout area on the transports. So maybe I could have changed that a little bit. But my point here is we're just now making a breakout above this downtrend line that we've seen for about last year and a half on the transports. So I think that bodes very well. And I think the uptrend that we have going in the S&P 500 is coinciding with this uptrend that is formed off the bottom from October, actually late September of 2022. We're now moving higher, breaking out on transports. That's something to be aware of, because it is in the past become or triggered a really nice move in the S&P 500. So that's something to at least keep in the back of your mind. Now let's look at 3 individual industry group charts within the industrials. So of course, with the transports, I'm going to give you a couple of industry groups within the transports. One, this is the airlines. Now, if you look at the airlines, this is going back, last 5 years. This isn't a group that tends to just go up and have shallow pullbacks and then go up again and shallow pullback. This is a group that tends to really struggle over a long period of time. And even if we go back and look at the monthly 15-year chart, you'll see that, we set a high back in 2017 and we haven't been able to get back up there. And I could go back even further. Let's go back 25 years on the airlines. Where did we start in year 2000? Right at about 180 on the index. Or 160. Look where we are now, 187. Airlines are not a good area to just buy and hold. They tend to go up and down with economic cycles. And right now, if you look at the weekly chart, and this goes back the last 5 years, check out this downtrend line right here. I didn't annotate it, but if you look at this downtrend line, we broke that just about the beginning of this month. And airlines right now are on absolute fire. And so that's part of what's driving transportation stocks up, and the industrials as a whole, the XLI. And as transports go, they tend to lead the S&P 500. So we've got really good action here on the airlines. How about the truckers? The truckers have been in this nice little uptrend since September of last year. I mean, you can connect these lows if you'd like. See a nice little trend. But look at what's going on here in June. Big push to the upside. Now back above 1550. I think we've got 1600, 1650 on our radar. I think we're going to get there and eventually make the breakout. But we've got the PPO starting to turn back up. Price action's been awesome. And this is another area within the transportation stocks. So it's always exciting to see these transports starting to move like this. One other area that I'll give you within the industrials is the building materials and fixtures group. Look at where we were in April. Struggling. You could see you had a couple tops up here around 1500, unable really to pierce that level. We went back down. We put in a higher low. And by the way, notice this was a double bottom. And here's the high in between the double bottom. That becomes a really important resistance level. We couldn't get through it back in January. But after pulling back for a couple months, now the building materials and fixtures group is absolutely taken off. We went back up, tested 1500, pulled back, hit the 20-week moving average, and then we have exploded over the last 5 weeks to move to new highs. So this is another area within the industrials looking extremely bullish, and I think going to carry us on this index back to 1900, which at this point would still represent probably another 15% higher than we are right now. So industrials, while they are not, this is not the sector that normally picks the stock market up and carries it on its back. It is a very cyclical sector in nature or by nature. And as a result, when we see this group moving, it's generally a sign that the economic activity is either picking up or expected to pick up. That's what Wall Street, that's what these charts are telling me. And when that happens, the S&P 500 goes along for the ride. So I really like what's going on right now. I'll be talking about the transports and a lot of other issues that I see in the market during that event next Thursday. So again, just want to mention, this is the bullseye forecast. You want to make sure you register, get registered early, make sure you save yourself a seat for next Thursday, July 6th at 7 p.m. Eastern. So that'll be 4 p.m. out on the West Coast. Would love to have you. I'll go over what's happened to date and where we stand in terms of the bear market of 2022. And then I'll give you some ideas and thoughts as we go throughout the balance of 2023. I think it'll be eye-opening. And as I said earlier, I don't know anyone that's called the market any better than we have at Earnings Beats for really the last handful of years, but especially over the last 2, guiding our members through all of the turmoil with the 2022 bear market, and then having the conviction to call bottoms when no one else did. Come check us out on Thursday of next week. We'd love to have you. Again, it was just a pleasure joining you today on your Daily 5. I love doing these. I like to, give you some educational content that I think is really important to help you grow as a trader. Please remember to go to earningsbeats.com, sign up for our free Bullseye Forecast mid-year update event. Again, that's scheduled for next Thursday, July 6th at 7 p.m. Eastern. Happy trading, everyone.